Hey everybody, how's it going today? Well, I have been following a few of the 3D printing stocks ever since they had their little mania back in 2014. Now, the 3D printing revolution has taken a lot longer than they originally expected back then, but Ark Invest believes it's about to accelerate and finally come to fruition in the next few years. Now, when I looked at their holdings, it really surprised me to see the one they've been buying the most of lately. In this video, I'm going to tell you about this company and take a look at their chart and show you why I think their big run could be just starting. This company is called X1. For more than 20 years, X1 has been the global leader in industrial 3D printing systems. Their machines 3D print powder particles, whether that's metal, sand, ceramics, or other material, into molds, cores, sacrificial tooling, and final end-use parts. Their 3D printers are among the most researched in the world, cited in more than 95 peer-reviewed technical and scientific articles. The X1 process, which utilizes binder jetting technology with industrial materials, gives traditional manufacturers an opportunity to reduce costs, lower the risk of trial and error, and create opportunities for design innovation. X1 provides 3D printing machines, 3D printed products, and related services to industrial customers in multiple segments, including pumps, automotive, aerospace, heavy equipment, and energy. They collaborate with their customers through the entire development and production process, so they are able to materialize new concepts, designs, prototypes, and production parts precisely when needed. So X1 offers both services and equipment to enable rapid point-of-use manufacturing. Now right here is a short clip from a few months ago of Tasha Keeney, an analyst from Ark Invest, explaining 3D printing a little further, as well as talking about its investment potential.
3D printing is a form of additive manufacturing. So traditional or subtractive manufacturing, you can think of as you have a big block of material and you shave away at it to create your part. 3D printing builds the part from the ground up in a layer by layer process. And when you do that, you get a lot of advantages. One of the biggest ones is you basically eliminate any constraints that you previously had on your design. So you can create parts that you could have never made with traditional manufacturing. And in doing that, you can actually now use AI to design the part. So you get these parts that a human could have never imagined, that could have never been produced before, but you can today with 3D printing. So this is really disruptive for the healthcare and aerospace markets, any market where you have very complex, low-volume parts. So for aerospace, you can often save weight in 3D printing, and a very small percentage savings in weight, say if you reduce the weight of a part by 5%, you could save 20% on fuel burn. So that makes a lot of difference to the margins of these aerospace companies. On the healthcare side, anything that's customized, basically you can scan a human body and print out an implant that's designed specifically for the patient. Previously, implants, you'd find whatever the closest fit was, you might actually have to shave away at the patient's bone to make it fit. So you're getting shorter operating times and better patient outcomes with this technology. So I think that overall supply chains, I'd say for manufacturing businesses overall, supply chains will shorten. I think that in terms of outsourcing, anything that's outsourced to, say, like a lower cost environment today or a lower cost country in terms of labor, you actually might get that. You might see those parts becoming insourced and moving, back home if you're, say, in the U.S. or here and you're outsourcing to China, for instance. I think that overall, automation, we've seen in a lot of cases, again, while it can displace jobs, it can also augment them. So basically, 3D printing you can think of as a form of that. It might replace sort of some lower skilled tasks and allow humans to sort of take the higher skilled jobs. So 3D printing today is about a $10 billion market. We think that could grow to $97 billion in the next 5 years. That's because we expect 3D printing today is mostly prototyping. That's about a $12 to $13 billion industry globally. The end-use parts that go into the final product is about a $500 billion opportunity, and we think it's only 1% penetrated today. So there's this massive greenfield space opportunity for 3D printing, and we still think it's pretty early days for the technology. Our top holding in the space is Stratasys. They're a leader in 3D printing for plastic parts. So they, particularly in aerospace, they've made a lot of headway in printing and in using their technology for plastic and composite parts for aircraft. Some of the losers would be more the traditional manufacturing companies that choose not to adopt the technology. So we don't think that necessarily injection molding or some of the old manufacturing processes will completely go away. But if you look at something like hearing aids, for instance, all hearing aids today are 3D printed. And that took, I believe, less than 2 years for the entire industry to shift over because it made so much sense. So I'd say any manufacturing company that doesn't adapt quick enough to this change likely won't be able to stay cost competitive.
The global 3D printing market size was valued at $11.58 billion in 2019 and is expected to expand at a compounded annual growth rate exceeding 14% from 2020 to 2027. Globally, 1.4 million units of 3D printers were shipped in 2018, and this number is expected to reach over 8 million units by 2027. The aggressive research and development in three-dimensional printing and growing demand for prototyping applications from various industry verticals, particularly healthcare, automotive, and aerospace and defense, are the factors expected to drive the market growth. Now, if we go over to Ark Invest Holdings and bring up their 3D printing ETF, ticker symbol PRNT, it says X1 has become their biggest position. And I checked their other ETFs, and they have been accumulating X1 in 2 of their other ETFs as well. In their innovation ETF, ticker symbol ARKK, X1 is their 46th biggest position. And in their tech and robotics ETFs, ticker symbol ARKQ, X1 has become their 20th biggest position. So they have over 3.6 million shares worth over $45 million now. Now, if we look at the insider trading for X1 on the Nasdaq's website, it says there have been a total of 17 insider transactions in the last 12 months, with every single one being a buy order for a total of over 223,000 shares purchased. The fact that there have been no recorded sales despite the stock price run-up is a very good sign for the long-term prospects because it's very common and normal for insiders to sell off some shares after a big price appreciation. Now, if we go over to the income statement, we can see even though they've struggled with profitability, total revenue went from $47 million in 2016 to $57 million in 2017 to $64 million in 2018, but fell to $53 million in 2019. So there was a little bit of a drop-off, and with the pandemic happening this year, I would expect numbers to be a little soft this year as well. But many are saying the shutdown is actually going to accelerate companies looking to use 3D printing components and services. And if we jump over to FinViz, we can see how nice that chart looks right now. It had a nice move up and is now having a big, juicy pullback in the uptrend, and that's what I like to see. And if we zoom into the numbers, next year's EPS is expected to grow at 15%, but if we look at the next 5 years of EPS, that's expected to grow at over 46%. And that's what Ark Invest loves, big growth. And if we remember from before, Ark owns 3.6 million shares of X1, and the float is only 13.85 million shares, so Ark owns over 25% of this company, a truly massive position. Okay, so right here we have the daily chart of the X1 company, and as we can see, this stock has been on a very nice run since March. Of course, the bottom in the pandemic, this stock fell all the way down to under $4 a share, but as of a couple weeks ago, it almost touched $17 a share, but it is having a big, nice, juicy pullback at the moment. Pulling back to this blue line on the chart, which is the 50-day simple moving average. It did not touch it as of yet, but if you guys follow me at all, you know that I love to buy big pullbacks into the 50-day simple moving average. I have not bought any of this one just yet. It kind of snuck up on me. I have been checking in on the 3D printers from time to time. Like I said, I was following them back in 2014 when they went on their mania. But this is the one that I didn't expect to be one of the leaders once 3D printing industry, started to get its footing and really start growing. If I had to guess, I would have said it would have been Stratus System or maybe 3D Systems. But X1 has been the best performer of the ones that I follow. And let's go back to 3D Systems. If if we look at 3D Systems, it has been very weak. And in fact, right now, it is below the lows that it made during the pandemic sell-off. So I'm very surprised that 3D Systems has been so weak. And then, of course, Stratasystem, I figured this was going to be the strongest of them. But Stratasystem at the moment is sitting right at the lows that it made during the pandemic lows. So you can see that these two companies have been the polar opposite compared to X1. And the other one that I follow has been VoxelJet, and this one's trading at $8, but you can see back here a few weeks ago it had a 1-for-5 reverse split, so don't let the share price fool you. It was actually trading around $1 before it had that 5-to-1 reverse split. But we go back to X1. If I can remember how to spell. Go back to X1, can back out into the weekly chart, and I will show you why I really, really like this long-term chart for a sustained bullish move if we get another move back up into the upper teens. But this stock went public in 2013, just before the mania started, and it rode that mania up, and it came public at $25 a share, and it rode that mania up to almost $80 a share, but it has been in a slow grinding downtrend ever since, just because this industry hasn't been producing as well as they thought. It's just been dragging along. But I love long bases in lower price stocks. These long accumulation bases usually come just before big price run-ups. So as far as I'm concerned, X1 has been in a consolidation pattern ever since 2015. And if we can get a move up into this area, I think the chances are very good that X1 has a long, sustainable uptrend. And when you consider that a lot of experts are thinking the 3D printing industry is finally going to be taking off in the next 5 to 10 years, it's going to have a lot of growth ahead of it. It wouldn't surprise me to see X1 do very well in the next coming years, But let's go back to 3D Systems. Now we're back to the weekly chart, and I'll just show you that mania that they had, in case you don't remember or if you weren't investing in the market back then. And you can see these little notes. I was actually trading this stock on the way up. Sold off in the 40s. I didn't realize that mania was going to go on so far, but at least I got out before now. And actually, this note was when I bought some long-term options, and I ended up closing out most of the option position here. But when it broke out in 2017, I thought for sure it was going to go higher, so I only sold part of my options off. I got like all of my money back, and I probably tripled my money, but I still had some options left. And unfortunately, I held on to them till expiration, and the rest of them expired worthless. But like I said, on that first lot, I did make all my money back. But in hindsight, I should have sold them all right here. I would have had a very, very nice option gain. But I just wanted to show you that I have been following these for a while. Let's go to Stratasystem, and Stratasystem was the strongest. And I never actually bought or sold any Stratasystem. I think that I was only messing around with 3D Systems. But Stratasystems had a very big run. It didn't have that climax top like 3D Systems had, that exaggerated blow-off move. But it did have a very big move from 2011 all the way to the 2014 top. As you can see, it went from $20 all the way up to $130. So that was a very nice move. But if we fast forward to present day, oh, there is a note. Maybe I did trade that. Let me see here. If we fast forward to present day, we can see that it is not looking very bullish right now at all. And if we go to VoxelJet, I'll show you that they went public during the mania as well. Let me back the chart back up. Sorry for flip-flopping back and forth. I just wanted to show you guys the mania that these things had. but it came public, and actually it had that 5-to-1 reverse split. So even though it's showing $100, it actually came public at $20, and it topped out around 80 or so, if my memory serves. But when these things came public, everybody thought that everybody was going to have or at least a lot of investors thought that all the consumers were going to be having these 3D printers in their homes in the next couple of years. You know, they thought it was going to be just as common as the printers you have for your computers. They thought everybody was going to have one, but that has not materialized yet. But a lot of the experts, especially the ones at Ark Invest, are very bullish on this sector in the next 5 to 10 years. I think it may finally be coming to fruition. And it looks like X1 is going to be the strongest, because it is definitely performing better than the other ones, and it does have that very, very nice base. So if this thing breaks into the upper teens again, I don't know if I'm going to be buying any just yet. I have probably more positions than I need right now, so I'm spread a little bit thin, but I just wanted to show you this company that Ark Invest is accumulating, and I think they have a lot of potential if they break back into those upper teens, and especially if the market continues this rally. X1 could be a very strong one going forward. All right, folks, well, that's all I have for you today. Just remember, I am not a financial advisor, so please do all of your own research. Please like the video if you found it entertaining, and subscribe to my channel if you haven't already, so you don't miss any future trading and investing ideas. Thank you so much for watching my video, and until next time, take care, everybody.